is the question. A Bitcoin ETF, it's now widely expected to get the green light this week. Two sources close to the process now telling me it's looking like Wednesday, which is also the deadline for Cathie Wood's ARK and 21 shares bid. Then I'm told potential trading would happen Thursday or Friday, but it has been a moving target here on dates. The SEC is expected to approve a handful of applications at once. Those sponsors filing even more paperwork this morning, where we are starting to get a sense of this price war emerging. There are 13 applications out.
So the Bitcoin spot ETF gets approved tomorrow, January 10th, and goes live on January 11th, which is the very next day. In this video, I'm going to tell you everything you need to know about the Bitcoin spot ETF, how it compares to gold, and why Bitcoin could get to over $200,000 this cycle. So like the video and let's get started. So a couple headlines here. Now, this spot ETF has garnered a lot of attention, a lot of hype, and rightfully so. This is from Cointelegraph.com. Spot Bitcoin ETF inflows could dwarf all 163 crypto ETPs today. United States approved spot Bitcoin exchange traded funds could end up dwarfing the entire $50 billion crypto-related ETF market today. Some analysts are even saying this could be the most successful ETF launch ever across the board, all commodities, all stocks, all indices. We have this from Bitwise. They are predicting $80,000 Bitcoin in 2024 as the ETF launch will be the most successful in history. And then we have the likes of BlackRock, who is one of the big filers for the ETF. They are lining up $2 billion to pour in to the ETF when it goes live. Again, that date is tomorrow, and the very next day should go live. So BlackRock, the world's largest asset manager, has reportedly lined up more than $2 billion for its spot ETF within days of launch. VanEck, head of digital asset research and a Bloomberg ETF analyst, have independently verified with sources that BlackRock has, quote, a big day one capital lined up for its spot ETF. Now, the important thing when you hear these analysts speak about an ETF, and what's the important thing? It is who gets out of the gate the fastest, who can attract the most money, who can attract the most volume. That will be the winner, and that company will make the most money with these ETFs. So it's no surprise that companies like BlackRock are really positioning themselves with exorbitant amounts of money to get ready to buy Bitcoin to fulfill their ETF. Now, a lot of people have been asking, well, we have an ETF now, right? Grayscale. You can buy and have exposure to Bitcoin on traditional assets. Well, kind of, but not really. In this video from Yahoo Finance, they explained the biggest difference between a trust, kind of like what Grayscale is, and a spot ETF. Take a listen at what this lady has to say.
Close to a closed-end fund where they have a trust that's actually holding on to this Bitcoin, and now they've issued shares, and each share represents a fraction of a Bitcoin. Now, where the departure from that model versus the ETF comes in is that Grayscale is not required to redeem shares. So I may hold shares of the Grayscale Bitcoin Trust, and if I want to cash out, the only way for me to do that is for me to sell my shares on the secondary market. But I can't go to Grayscale and redeem those shares myself, either for the cash equivalent or for the Bitcoin itself. Now, the move to an ETF is a bit of a hybrid where you have a large financial institution that's stepping in to serve as this function to allow investors to redeem their shares by way of this authorized participant. So what the authorized participant would do is if Bitcoin is trading at a higher value than what the shares of the ETF are trading at, then this authorized participant will want to create more shares of the ETF. They'll go out and buy Bitcoin, deposit it in the trust, create more shares of the ETF, and sell those shares. So you'll start to see the value of those shares converge to what that Bitcoin is worth. And now at the same time, if those shares start to become worth less than what Bitcoin is worth, then the authorized participant will do the opposite. They'll go out and they'll purchase shares from investors, and then they'll redeposit those shares because only this authorized participant has the institutional size to collect enough shares. And now the trust will be required to redeem that large quantity of shares that the authorized.
So that is the biggest difference is the need and requirement to go out and actually purchase the Bitcoin that underlies the ETF shares. So hope that made a lot of sense to you. Now, here's from Benzinga, 4 critical Bitcoin ETF factors to watch ahead of the SEC's imminent decision. One is the fee wars. So we've had a bit of a back and forth between the 11 filers bringing their fees down because, again, whoever garners the most liquidity and the most trading volume will be the winner. Some examples here. We have ARK coming in at 25 basis points, Bitwise at 24 basis points. This is how big of a deal this is. You have Bitwise undercutting ARK by 0.01%. By 0.01%, you even have some filers like Invesco and Galaxy's product who are giving you a 0% intro for the first 6 months or until the fund reaches $5 billion. Again, showing the importance that these institutions are putting on the spot ETF. FOMO factor, institutions hold the key to mass adoption. We're going to talk about in this video the launch of the first gold spot ETF and how that compares to Bitcoin and what we could potentially see. We have number 3, the regulatory rumble. Are institutions your friend? We hear the likes of Kevin O'Leary and other, smart capital VC investors in the space talk about we need regulatory clarity before we can have exposure to Bitcoin. An approval of a spot ETF is the SEC giving a stamp of regulatory approval to the asset. And number 4, the Grayscale Gambit. Is the king dead? Now, Grayscale, this is a unique one. They have the highest fee on their ETF coming in at 1.5%, which might work out in the favor of the investor because Grayscale currently already holds over 600,000 Bitcoin. So if no one is selling their fund and they end up getting bought out, which is the rumor around, it could be potentially good as new money starts to flow into these products and asset managers that don't yet have that Bitcoin that would have to go out and buy it. Now, I mentioned gold. This is an article from Market Watch, how gold ETFs have transformed the market in 10 years. Investors are celebrating the 10th anniversary of the world's first exchange-traded fund backed by physical gold, and they're in awe over how much the investment vehicle has altered the landscape for the precious metals market forever. So gold went live. We also have silver. We have copper, nickel, all the other commodities. Can Bitcoin do the same for crypto? Can Bitcoin spot ETF, the success of a Bitcoin spot ETF, have similar impact on the altcoin markets as gold did for the other commodities and precious metals? That will be yet to be seen. Also from the institutionalinvestor.com, the first U.S. traded gold ETF turns 10 years old. Spider Gold ETF revolutionized the gold trading when it launched 10 years ago. The ETF put precious metals investing into the mainstream and eliminated headaches from insurance, shipping, and storage vaults. So a lot of people are saying, look, I don't feel comfortable having a Coinbase or a Kraken or a KuCoin or a Binance account. I also don't want to custody my own crypto. I'm too scared of losing my seed phrase. An ETF solves all those problems for those people. The ETF amassed more than, speaking about gold, the ETF amassed more than $1 billion in assets in the first 3 days, which sealed its place in history as the fastest an ETF has ever attracted that level of assets. And a lot of pundits and analysts are saying Bitcoin is going to shatter that record. Within 15 months, it had raked in $5 billion, and within 3 years, $10 billion. If we take a look at a gold chart here, this is gold on the weekly. This vertical line I have pulled up, this was when the gold ETF was approved. And subsequently, over the next 2,500 days, so about 10 years, almost 10 years, gold saw an increase of over 327%. If we put out the same for Bitcoin, and we know Bitcoin's more volatile, it's definitely going to do more than a 327% over the next 10 years. But if we took the absolute worst case scenario and said, hey, gold did this, Bitcoin can do this, my friends, we are looking at an over $200,000 Bitcoin per coin. So if you think 200K is in the cards for this cycle, put a 1 in the comment section. Also, comparing gold ETF to Bitcoin ETF, gold versus Bitcoin spot ETFs, price impact insights. So a couple things I've highlighted here. The introduction of a Bitcoin spot ETF could provide investors with a similar ease of access and liquidity that the gold spot ETF brought to the market in 2004. Gold has a long history as a tangible asset, valued for its aesthetic appeal and industrial applications. On the other hand, Bitcoin, being a digital currency, is relatively new and often subject to higher volatility. While gold is often seen as a traditional store of value, Bitcoin is perceived by many as a more speculative and riskier investment. Think about all the people that were getting ready to retire that have had 60% stocks and 40% cash, and we're going to invest in gold, and they've seen 4, 5, 6% gains. But inflation has been 7, 8, 9, 10% over the last 2 years. Those people are sick and tired. They can't even retire. Guess what? Here comes a shiny new product that's been averaging over 150% compounded annual growth rate over the past 10 years. Who's not going to want exposure to that? We had this from Watcher Guru. Compare the potential of Bitcoin ETFs to gold ETFs. A couple things I've highlighted down here. In a recent report, NYDIG noted how gold funds entail a great deal of investments. There's over $210 billion invested in gold funds. However, only $28 billion in Bitcoin funds, but that is about to change. And it goes on to say, quote, Bitcoin is about 3.6 times more volatile than gold, meaning that on a volatility equivalent basis, investors would require 3.6 times less Bitcoin than gold on a dollar basis to get as much risk exposure. Still, that would result in nearly $30 billion of incremental demand for a Bitcoin ETF. Now let's talk about how much money could potentially flow into this ETF. We have this tweet from Caitlin Cook. As someone who used to spend all day every day selling ETFs and other financial products, I can promise you one thing: even if bullish, most of you are drastically underestimating the long-run impact of crypto ETF approvals. She goes on to talk about the registered investment advisory industry, the RIAs, the people who these baby boomers and the traditional investor go to once every 6 months, once every 1 year to sit down and say, hey, how should we reallocate this portfolio? Those RIAs are now going to have access to put their hands on a Bitcoin spot ETF. The RIA asset talks about it grew by 2.1% in 2022 with over 15,000 fiduciary investment advisors managing $114 trillion for 61 million clients. Now imagine even a fraction of a percentage of those assets going into a spot Bitcoin ETF. Well, speaking of spot Bitcoin ETF, there is currently, per this chart here, with the 10 filers that are getting ready to get approved, we're looking at a total AUM, assets under management, of $16.69 trillion. $16.69 trillion is now going to have access to Bitcoin. And that number is expected to grow as more companies, the other giants in the industry that haven't applied for one, could potentially see there's a lot of money to be made. We want to apply to one as well. Not to mention the people with those accounts say, hey, how come you don't have a product? I want to invest in Bitcoin. That's going to happen as well. Now let's talk about how much of this money could potentially flow into Bitcoin. This is from public.com. Plenty of financial planners and other experts recommend that their clients keep their cryptocurrency investment allocation minimal. In fact, investing 5% of your portfolio in crypto is an often quoted percentage of your net worth tied to tie up in crypto assets. Some experts recommend starting much lower with just 1%. Even if it was 1%, you're looking at $166.9 billion. That's billion with a B, potentially flowing into Bitcoin. Well, how does that affect the price? Well, here we have this from Bank of America. As they claim, it costs just $93 million to move Bitcoin's price by 1%. So I challenge you watching. Get out your calculator, do the math. $169 billion divided by 93 million. What percentage gains could we expect to potentially see from the Bitcoin Spot ETF? We hope you enjoyed this video. Make sure to hit the like button, subscribe to the channel, and come check out our live show Monday through Friday at 2 p.m. Eastern Standard Time. We'll see you next time. Peace.